Hey traders, Shane back again. I'm going to take you through how to calculate our bullish bearish ratio now. So this is really the key to determining what the trend is for the day. Now, whether we do this one-off or it's done multiple times, but I'm going to take you through how to do it as a one-off fixed time setup. So we've got our start time at 9 o'clock. Our time setup is 9:05. That's our bar there. We've calculated our high and our low. We've worked out our average line, 39.66. So then anything above that line is measured. Anything below that line is measured up until the interval bar. So the interval bar becomes critical because what it means is that our interval bar is determining how far we're going to measure the ticks above and below to. So what we have here in our strategy input, and we'll go to that now, we have a input that says our delay or input bar or interval bar. So the delay is how far from that 5-minute initial time setup we're calculating ticks above and below 2. So I've got on here 60 minutes. So 60 minutes later, after we've had that first price bar print after our start time, we're going to recalculate how far the markets move both above and below that average line. That's all that's doing. Basically calculating what kind of movement we've had in the day or for the period that we've selected. So for us it's been 60 minutes. So what it says here is that from our initial time setup at 9:05, we had price move up and we've moved up 23 ticks, and then we've also had price at a point move down to around about 47 ticks. And you can see here that there's our interval bar. So that's basically that's our point in the sand or line in the sand of where we're going to stop recording the movement above and below, because there has to be a point at which we stop recording those values above and below, and then we can determine our bullish bearish ratio. So all we do is we're calculating our bullish bearish ratio. All we do is we take our value of 0.23 and we divide that by 0.47. There are our two values, our tick value up and our tick value down, and that gives us a total of 0.48. Now 0.48 based on our scale, so we have a scale of bullish and bearish. So if you refer to your strategy document, you'll see that the bullish and bearish scale under strategy settings is a value settings. So you'll see the value settings there. A bullish value, a bullish bearish ratio value is going to be anything greater than, a bullish value is going to be anything greater than 1. Neutral is going to be 1 or equal to 1. And then a bearish value is anything less than 1. So if you have a look at our value here, we're actually less than 1, we're 0.48. That means we've got a bearish value, so that means we've got a bearish market. So straight away we've been able to determine that within this price action we've got a bearish market based on a fixed assessment. Now we obviously are able to do the dynamic assessment, and we're going to do that. We're going to show an example of that shortly, but this is calculating a fixed assessment at 9 o'clock with a 5-minute bar setting up as our time setup, and then 60 minutes later we're setting up our interval or delay bar, and then it's giving us our calculation for working out our bullish bearish ratio, which comes out as a bearish market at 0.48. So remember, anything less than 1 is going to be a bearish ratio. So that was a look at how to calculate our bullish bearish ratio for a bearish ratio. So thanks for your time, and we'll look forward to catching you on the next video. Cheers.